what is the value of telepath plant? Is it right? Telepath plant as at 30th September 2003. Is it right? Now, what is the value plant? How much is the plant? First, focus on the plant. Is it right? They said plant is how much? 30th September is year ended 31st September 2020, 2005, 2006. This much is there. Is it right? And they're asking for which date? We are talking. What is the value in use of telepath plant as at 2003? Fine, good, no problem. Fine. We have three different stages, is it right? On September 30th, 2003, Telepath has informed a major customer that it will no longer be placing orders with Telepath company. As a result, Telepath revised its estimate that net cash flow earned from the plant for the next 3 years would be how much? For the next 3 years would be how much? 220, 180 and 490. Is it? Now, what they are asking? They are asking what is the value in use? Okay, value in use of Telepath company's plant. Is it? They have given us. They are given. It's very easy. Understand, that's more important. Okay, they have given 220. Is it? They have given 220 and they have given the 10% cost of capital, 0.91, 0.83. You have to multiply and you have to add. That's all. Okay, you have to multiply because they want what they are talking about. What is the value to be for the next 3 years? Is it right? Next 3 years, 220 times 0.91, 180 points 0.83, 200 point into 0.75. You will get the values, present values, and those present values, if you add it, then that will be equal to the value of the plant as such. Is it? Value of the plant as such. Now what we have to make? We have to make a small table. Is it? Right? We will put it as a particulars. We put it as a particulars. We have to take it as a cash flow. Is it right? We have to take as a cash flow. We have to take as a discount factor at the rate of 10% and present values. Okay, particulars is how much? They have said it is on 2004, 2005, 2006. Is it right? 2004, 2005, 2006. Is it? Means when we are talking about the as at 2003, means we are going back. We are discounting the thing. We are calculating the present values of the cash flows. How they are going to have. How much is the cash flows? 220. Is that in thousands? Okay, in thousands. Is it 220? How much is there? 180. And how much is there? 200. Okay, they gave you is it 200, 220, 220, 180, 200. 0.91, 0.83, 0.75. 0.91, 0.91, 0.83. 0.91, 0.83, 0.75. Okay, 0.75. Column 1, column 2, column 3, column 4 equal to 2 times 3. Is it 2 times 3? How much you'll get? Just do it. 220 into 0.91. 220.91. It comes to 200.2. Okay. 180 times 0.83. It comes to 149.4. Is it? 200 times 0.75. It comes to how much? 150. Total it. 149.4, 200.2. Comes to how much? It comes to 499.6. This is in thousands. Okay. This is 499.6. Answer is it okay?
Yes.
Next. Any doubt is there, you ask me, okay? Which of the following is true? Okay, which of the following is true in accordance to the IAS 36? Is it right? IAS 36. I will we should have better to have one review of IAS 6 impairment. Is it right? One review about the impairment of assets. It will be a little bit. Once like, we will revise it very. Is it? This is the learning objectives. Impairment is market value, change in use. These are the indicators. Okay, these are the indicators. Is it right? Change in technology and obsolescence. Is it right? Change in obsolescence. Impairment review is carrying amount, recoverable amount, greater fair value, value in use. Is it right? Indicators, find cash generated units. What they are asking us? Which of the following are true in accordance with the IAS 36 impairment of a cash generated unit is the smallest identifiable group of assets for which individual cash flows can be identified and measured. When considering the impairment of a cash generated unit, the calculation of the carrying amount and the recoverable amount does not need to be based on exactly the same group of assets. When it is not possible to calculate the recoverable amount of a single asset, then cash generated units should be measured. Means they are focusing on cash generated units. Is that? They are focusing on cash generated units. We will also focus on the cash generated units. What is the impairment? We have done something on the what is the cash generated unit? Smallest identifiable group of assets which generate cash inflows independent of other assets. Cash generated assets should be carried at a lower, is it at carrying amount of all assets at CGU combined, or recoverable amount of CGU is recoverable amount of all the assets in CGU combined. Whether it is a carrying amount or it is a recoverable amount. Is it right? These are the cash generated unit. Cash generated unit is the smallest identifiable group of assets. Cash assets in the group together, combined value is compared to the total recoverable amount. Impairment exists in the carrying amount is greater than recoverable amount. Is it? That's as simple as that. If carrying amount is greater than recoverable amount, what will happen? It is going to be called as a impairment. Is it? It is going to be called as a impairment. Alhamdulillah, we will have very handy. Whenever you want, you can refer the lectures also. The calculated total impairment needs to be allocated against specific assets, specifically impaired items. These are the conditions of the cash generated units. Okay. Now you go to the question as such. Here we go to the question as such. What is the true according to the impairment? A cash generated unit is the smallest identifiable group of assets for which it is going to be measured. Is it right? Is it right? It is going to be measured. Is it right? This is the first one. Is it right? Good, right. When considering the impairment of cash generating unit, the calculation of the carrying amount and the recoverable amount does not know. It has to be based. Carrying amount should be, impairment is what? Carrying amount should be greater than the value. Is it? Is it right? Does not need, it is not like that. Is it right? When it is not possible to calculate the recoverable amount of the single unit, then the cash generated unit should be measured. This is one of the conditions. Is it right? This is what? One of the conditions. Answer is what? Answer is 1 and 3. Is it clear?
Yes.
Is it? If you do mock exams now with revision of the lectures, it really gives you a very good understanding about how the things will work. Okay. Next. What is the carrying amount of Ridla plant on 30th after impairment loss has been correctly allocated to its assets? Select your answer from the pull down list provided. What is that information they have given us? Telepart also owns Rilda 100% subsidiary as a cash generated unit. Is it? As a cash generated unit, there was an impairment of 3.5. The carrying amount of the assets Rilda is immediately before the impairment view. Goodwill, factory, plant and receivables. How much is there? 3.5. I told you, goodwill becomes 0. That's what it says. Goodwill, intangible assets will become 0. Current assets will have the same value. Is that? Points, write down somewhere. A very simple and very easy to score the marks. Impairment, when there is an impairment, what will happen? Intangible assets will become 0. Current assets will have the same value, and whatever the impairment value, that has to be allocated among the tangible assets, preferably property, plant and equipment only. Okay, we will make it a table and we will put the things in order. Okay, fine. We have space. Yeah, full space is there. Good. Is that what we have to do? First we have to take particulars. Then we have to say carrying amount. Then have to take carrying amount. Then we have to take impairment loss. Is it right? Then you have to take impairment loss and carrying amount after impairment. Carrying amount after impairment. Is that first we will take the things what they have mentioned. They have mentioned goodwill, they have mentioned property. Is it right? They have mentioned property, they have mentioned plant. Is it right? What is the other things? What are the other things? They have mentioned goodwill, factory building, receivables and cash. Is it right? Receivables and cash. It is a factory building. Okay. Factory. We will remove this. Why we have to add something which is not there? Is it right? This is the factory building. Is it right? This is the factory building. And what is the next one? And next one is plant. And the last one is cash and receivables. Is that easy? See, this is very important. You will get one question on this. Okay, you will get one question on this. Is that how much is the amount they have mentioned? 2000, 4000, 3500, 2500. We'll take in thousands, okay? We take in thousands. Is it? Be consistent about that, okay? Be consistent about that. If you are taking, try to eliminate zeros, but consistently follow that, okay? 2000s, it is 4000s, it is how much? 3500, 3500, it is how much? 2500. Is it? See, this will remain same, okay? 2500 current assets will remain same, okay? This will become zero, okay? Now goodwill will become zero, okay? The things are, what we have to do, we have to allocate that amount between how much? Between factory building and the plant. Is it right? 1 minute. Factory building is how much? Factory is how much? Factory is 4000. Is it right? Factory is 4000. Fine. Now 1 minute. What is the total of this? What is the total of this? 0, 0, 0, 1, 7, 10, 12. Is that 7, 10, 12? How much is the here? It comes to how much? It comes to the impairment loss is how much? Impairment loss is 3500. Is it right? 3500. Out of these 3500, 2000 is gone. Okay. Out of this 3000, 2500 is gone. Is it right? Now, if that is the case, 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 remaining impairment loss. Is it right? Remaining impairment loss. How much is there? 3500 minus 2000. It comes to how much? 1500. Okay. It comes to how much? 1500. Now, how we have to do what? We have to allocate this 1500 between, so how much is there? 4000s plus 3500. Okay. 4000s into 3500, 7500 is it? 1500 into 4000 divided by 7500. Good. Is it? Factory building. Factory building. How much? Factory building. See the things. How much this total is there? If you take the total of these two, is it right? If you take the total of these two, how much? 7500. What is the impairment loss? Impairment loss is 1500. Is it? What is the factory building? 4000. Is it? Means 1500 times 4000 divided by 4000 divided by 7500. It comes to how much? It comes to 800. It comes to how much? 800. Next, how much is the plant? Plant is how much? Same thing, 1500. Any doubt? You ask me. Okay. Any doubt? Divided by 7500. Is it right? 7500 equal to how much? Equal to 700. Fine. How much factory building is there? Factory building is 800. Is it right? Factory building is 800 minus. Is it right? 4000 minus 800. How much? 4000 minus 800 is 3200. Plant is how much? 700. Is it? 3500 minus 700. It comes to how much? 2800. Is it right? 2800. What they are asking us? They are asking us what is the carrying amount of Rilda's plant. Okay. Plant as on 30th this September. What is the carrying value of the plant as on 31st September? The carrying value of the plant as on 31st September is 2800. Answer is it clear?
Yes.
I can sense from your voice, is it right? If you understand, voice is really confident enough, is it right? Voice is very confident enough. I know, I can see, Alhamdulillah, I can sense if students are not understanding, they have some need some more explanation. Automatically, the voice response will have impact. Is it? Inshallah, khair, don't worry about that. Okay, inshallah. Fine, that is what it says. Next, is it right? No. The following scenario relates to 2120. You do one thing. Now you have to revise. Okay, you revise as your convenience, as you plan. Okay, we will focus only on exams pattern. Revision is revision, left, right, center. Is it right? Left. We will come tomorrow. Inshallah, we'll start ratio analysis. It will take 1 or 2 days. Tomorrow and day after tomorrow. If you need any additional classes, just let me know whenever you are free. Inshallah, we will schedule it. Okay. If you after preparation, if you need class whenever you are free, just let me know. We will coordinate and we will do mock exams only. Inshallah. At a board meeting in June 2003, Neutron's director made the decision to close down one of the factories and market means sell both the buildings and plant for sale. The decision has been made public and communicated to all affected parties. Was fully implemented by how much? Dates are important. Okay, dates are very important. When happened, it happens. They have more meeting is this one, and they have decided to do on. The directors of Neutron have provided following information. Of the factory 250 employees, 50 were retrained and deployed to other subsidiaries within the Neutron group during the year 30th September 2004. Okay, at a cost of this much. The remainder accept redundancy and average cost is how much? 5,000. Redundancy means they don't have any job, just they have to leave. Okay, for that time period they will pay for them. Is it right? The factory plant has a carrying amount of 2.2 million, but is only expected to sell for how much? Okay, fine. The carrying amount is more, the fair value is less. And they have the selling cost also, 50,000. Means for 50,000 they will realize. Is that immediately you have to see, you should not, is that carrying amount is how much? Carrying amount is 2.2 million. Is it right? Fair value is how much? Fair value is 500. Is it right? Selling cost is how much? Selling cost is 50,000. Is it right? 50,000. Immediately you say that how much you are going to get for 50,000. The factory itself is expected to sell for a profit of 1 point. The company also rented a number of machines in the factory under short-term lease, which have an average of 3 months to run after 30th September. The present value of future lease payments. This is related to lease. Okay, we can understand from that. At 30th September was 1 million. However, the lessor has stated it will accept if paid on as a full settlement. They say that fine, 1 million is the amount. If you pay once, it will be 850. Penalty payments due not completion of contracts are estimated of how much? 200. Means there is a penalty also. Is it 50% of which is expected to recover from Neutron's insurers. Means penalty is 200,000. They have to pay 100 from them and 100 from the insurance company. I'm giving time for you to also read, okay? Just if I'm stopping here means just I'm giving you time to read. Now, identify by selecting the relevant box in the table below whether the following statements are required or not required if the operation to be classified as a discontinued operations of IFRS non-current assets held for sale and discontinued operations. Is it right? Non-current assets held for sale or discontinued. Quickly we will go for that non-current assets for sale or discontinued operations. Quickly one revision will take, okay? Fast 2 minutes revision as if done somewhere in October, okay? Almost one and a half month before. What is the concept? Why we are going? Is it right? We are talking about the continued operation, discontinued operations. Okay, separate disclosures of materials of income and expenses. Requirements of classification, presentation of non-current assets held for sale, and updated rules for presentation of discontinued operations of financial statements. Is it discontinued operations and non-current held for sale? Discontinued operations, separate presentation. Non-current held for sale, you have to reclassify as a current. You have to reclassify as a current asset. Is it right? Somewhere you have done means we have to sell it off 12 months. There was some condition was there. Is it right? There was condition was there. If you remember, is it? Entity shall reclassify non-current assets if the carrying amount will be recovered principally the sale rather than continuing. Is it right? Management is committed to sales. Is it right? These are the conditions. Is it right? What is the management is committed to sales? There is an active program to locate a buyer, and the reason is actively marketed at a reasonable price. These are the important points. Understand what? These are the conditions. Is it right? These are the. Just to remind me by sending the message, I will again upload this on the OneDrive. Okay, updated versions on the OneDrive. Okay, these are the basic conditions of the non-current assets held for sale. Is it? What is the measurement? Should be measured at a lower value. Carrying amount, fair value less cost to sell, presented separately. If it is held for sale, presented separately and not depreciated. You should not do any depreciation. Is that you have to convert it into what? You have to convert it into a current assets. On current assets, we don't calculate depreciation. Is it right? That's example one. Discontinued operations represents major area of business. Coordinated dispose of to separate line of business. Fine. Discontinued operation must disclose a single amount on the face value, the post-tax profit. The analysis must include the revenue, expenses, and pre-tax profits. Is it right? Fine. These are the examples of that. Okay. MCQ is fine. What they are saying now come. Identify this theoretical one. We don't have any reference to the scenario. Is it? Identify by selecting a relevant box in the table below whether the following statements are required or not required if the operation is to be classified as a discontinued operation as per IFRS 5 non-current assets held for sale. The operations represents a separate major line of business or a job. Yes, that's what it says. Is it? The operations should be represented separate business. Is it right? Based on the line of business or on the geographical area. This is one of the conditions with respect to what? With respect to IFRS, it is required. Second one, you have to tell. The operations is a subsidiary. Yes or no? Is it a subsidiary or is not a subsidiary?
No, it's not subsidiary.
It is?
It is not subsidiary.
Good.
Not required, yani.
Not required. It is not subsidiary. It is a separate line of business. Is it next? The operation as has been sold or is held for sale. Required, not required.
Required.
Good. Take your time. I'm not okay, but very clearly. 1, 2, 3. I don't want to write like this. Okay. 5, 6. I will count. Maximum 10 I will count. Okay. That means why I am doing that is in examination you should make sure that you should not take more time. Okay. But what comes, see, what I understand from you is what comes first thing in your mind, that is the correct answer. That is what I have analyzed your responses. Okay. So don't change that 1 to 2 and 2 to 1. Okay. What comes first? Say Bismillah. Next. The operations is considered to not to be capable of making profit making following the period of losses. Means once you are going to held non-current sale for sale, you are selling the company, you are selling the assets, is it right? They think that in future there will not be any profits.
Not required.
Not required. There is no condition that, see, you are selling a non-performing unit and somebody will buy it and they will convert into a cash generated units. Is it right? Somebody will take and they will convert into cash generated units. Fine, good. You tell me, okay? You tell me. I will give you time, and inshallah it will work. What it says. IFRS 5 non-current assets held for sale and discontinued describe the recognition criteria for non-current assets held for sale. For asset or disposal group to be classified as held for sale, the sale must be highly probable. Just now we have covered this in the points. Okay? Just now we have covered. Which of the following must apply for the sale to be considered highly probable? Is that which of the following has to be considered? A buyer must have been located. The asset must be marketed at a reasonable price. Management must be committed to a plan to sell the assets. The sale must be expected to place within 6 months. It is not 6 months, it is next 12 months. Is it right? It is not 6 months, it is 12 months. Okay, automatically 4 is not there. Okay, automatically 4 is not there. If 4 is not there, this will be not there, this will be not there. Okay, if 4 is not there, is it next? what it says, the buyer must have been located. You must have been. You have to start the process. Is it right? You have to start the process of locating. Is it? It is not like that. You have to. It says the must means buyer is there. No, you have to start the process. Is it right? You have to start the process of locating. Is it right? Start the process of locating, identifying. Is it right? Is it? This is also not there. The asset must be marketed at a reasonable price. Management must be committed. This is very important to a plan to sell. Is it? Management must be committed to a plan to sell. Answer is what? Answer is 2 and 3. That is the reason. The moment there is a theoretical question, refer the slide, come back to the question, so that we will have some clarity. Is it okay?
Yes.
Next. What is the employee cost associated with the closure and sale of Neutron factory would be charged to profit and loss account for the year ended 2003? What is the associated with the closure and the sale of Neutron? Is it? Now, how many employees they are removing? Is it right? That's very important. They said that, where is that? The factory is carrying where they have said yes. It is right. Here it has been said. How much they say? They say that this is the point. Okay. This is the point. This is the one. Where it is there? Which question it is? It is question number 22. Is it right? It is question number 22. Is it related to? Is it related to question number 22? Of the factory 250 employees, 50 employees will be retrained and deployed to other subsidiaries. Fine. Within the neutron group during the year 30. Fine. That's at a cost of 125. The remainder, is it right? The remainder redundancy at the average cost of how much? How many employees are there? 200. Is it right? How many employees are there? 200 employees are there. Is it right? How many total employees? Is it right? Total employees are how much? Total employees are 250. Is it right? Retrained is how much? Retrained is how much? 50. Is it right? 200 employees are the people who are going to affect associated with closure. Is it right? The employee cost associated with the closure. Is it right? With the closure means how many employees? Employees related to closure. Is it right? The employees related to closure is how much? 200 employees. Is it? 200 employees. For this they are paying how much? 200 employees. What is the cost? They are paying a cost of how much? They are paying a cost of 5,000. Is it right? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 10. It comes to how much? It comes to 1 million. Fine. Is it okay?
Yes.
Next, what is the profit or loss on discontinued operation during resulting the property and plant for the equipment 2003? Discontinued operation. Which is the question? Question number 23. Is it right? Question number 23. Is it right? The company has rented a number of here. This is for question number 23. Is it? This is for question number 20. The factory plant was carrying amount is how much? 2.2 million. Is it? How much is the carrying amount? 2.2 million. Fine. And expected to sell 500. How much is the redundancy? How much selling cost? Selling cost is 50,000. The factory itself is expected to sell a profit of 1.2 million. We are not talking about that. We are talking about the plant only. 2.2 million, 500,000, 50,000. Is it right? 500,000, 50,000. Is it right? Now carrying amount is how much? Carrying amount is how much? Put it as A. Okay. Carrying amount is how much? Carrying amount is 2.2 million. Okay. Carrying amount is 2.2 million. Okay. Put one line. Net realizable value. Net realizable value is how much? For sale. Sale is how much? They have sell it for how much? 500. Okay. Next minus selling cost. Is it? Minus selling cost. Selling cost is how much? 50,000. Is it? Selling cost is how much? 50,000. 450. Is it? Or 0.450 million. Okay. Or 0.450 million. Okay, this is B. This is B. Right? Now. Is it right? Now what they say, what is the profit or loss? Profit or loss. Is it right? A is how much? A is 2.2. Okay, A is how much? 2.2. That is the carrying amount. Okay, A is how much? A is how much? I will write here. A is how much? Carrying amount is how much? Carrying amount A is how much? 2.2. Realizable value is how much? Realizable value B. Is it how much? B is 450,000. How much you will get?
One million 750,000.
Are you clear about this?
Yes.
In respect of lease. Okay. See now how many things they have added to the scenario. In the scenario they are talking about carrying amount, impairment, everything they have put, the cash generated units, everything they have put one point. Okay. In respect of the lease and penalty payment, via what provision is required to in the statement of financial position of Neutron company as the 31st December. As a 31st. What are the payments they are talking about? Respect of, first we have to see which question is there. It is question number 24. Okay, question number 24. Fine. Yes. Question number 24. This is related to question number 24. The company has rented a number of machines in the factory on the short lease, which have an average of 3 months to run after the fine. The present value of these lease payments is 1 million. However, the lessor has stated that they will accept. Lessor accepting means lessee is paying. How much you are paying? You are paying how much? You are paying 850. Okay? How much you are paying? You are paying 850. Lessee. Is it right? Payment, penalty payments due to, is it right? Penalty payments due to non-compliance of supply estimated to be how much? 200,000. 50% is expected to be recovered from neuron insurers. Is it right? 50% is going to be recovered from whom? Neuron insurers. Fine. What they are saying? What are the provisions is required? Is it what provision is required? Is it what provision is required? Fine. Good. Nothing. Inshallah. How much is there? How much they are paying? They are paying how much? 950. Where is the 850? Where? However, the lessor has stated that they will accept full settlement payment. Is how much? Is that full settlement payment? Is that full settlement payment? Is that full settlement payment is how much? 850,000. See, they are going to recover from the insurers. Fine, that is the future. But what is the penalty they add? Is it right? Add penalty. Is it right? Add penalty. How much is the penalty they have to pay? Penalty is they have to pay 200,000. Is that this is the provision they are making? Is it right? This is the provision. 510. Is it right? This is the provision to be made. Answer is what? Answer is Is it okay?
Yes.
This Saturday, this Thursday, Friday, Saturday, Sunday. Okay? This Thursday, Friday, Saturday, Sunday. We will do again mock exams. And you have exam on Wednesday or Friday. When is your exam?
Thursday.
Thursday. Okay. If you are having exam on that day, your convenience. Is that you want to make preparations? Fine. But if you want to do some more practice, inshallah, you have Thursday, na? Inshallah, we will have class on next Saturday, Sunday, Friday, Thursday, Friday, Saturday, Sunday. Is it that? Means 1 minute. 1 minute. This Thursday, Friday, Saturday, Sunday, inshallah. Okay? Done. What they are asking, the Speculate company is preparing its financial statements for the year end 30th December. Financial asset, they have the shareholding of A and shareholding of B. If there is anything related to ratio analysis, I will skip. Okay. If anything related to ratio analysis, I will skip and I will do again. Will at long-term investment of 10,000 in the equity shares of another company. These shares are acquired on at 1st October 3.5. Transaction cost is 1%. Purchase price increase on 30th. Okay. दे दो बेटा वहाँ पंखा भिजा दिया पैसा चलने का क्या बना रहा पराठा बना रहा Yeah, can I start?
Yes.
Uh, Speculate company is preparing its financial statements for the year 30th September. Is that the following issues are reviewed? If they are talking in terms of what? They are talking in terms of financial. Is it? They are talking in terms of financial assets. Is it? Financial assets. They are talking in terms of taxation. Is it? They are talking in terms of revenue. Fine. Financial assets, where we have covered these financial assets. We have covered these financial assets and financial liabilities in lecture 9. Okay, we have covered it in lecture 9. A very quick overview. Okay? We are talking about the equity, bonds, investments. Is it right? A very quick overview. Is it financial instruments, debt, equity, capital, presentation, disclosure, and IS 32, IFRS 7, IFRS 9. Is it? IFRS 7 disclosures, IFRS 32 is presentation, and IFRS 9 is a financial instrument. What is a financial asset? The definition of financial asset, the definition of financial liability, and how you have to recognize it. Initial value plus effective rate of interest minus interest paid. Is it? Deep discount bonds, how you have to calculate the value of the bond. Is it right? We have done this. Opening balance, effective rate of interest paid, closing balance. Is it right? We have done the same thing. Is it? Something with respect to the general entry. Step 1 is opening balance, effective rate of interest, closing balance. Is it? We have identified what is the non-current liability and what is the current liability. Is it right? Now, the advantage is if you just revise it quickly, we can have an idea of what we have done. Is it right? What we have preference shares. Is it right? Preference shares is the same thing. Is it right? Preference shares we have done with respect to presentation, non-current liabilities. Compound instruments is nothing but convertible. Is it right? Convertible into equity. Is it right? First they have issued bonds, then they have converted into equity. Is it right? Fine. We have done this. Is it right? All these are examples. Fine. It is a financial asset. Initial recognition is based on the when and only the entity becomes a contractual provision of the instruments. Is it right? If contractual means unless until when we are issuing, then only we will make it as a financial instrument. Is it right? Financial asset. Initial measurement should be measured at the fair value. Is that? Now you can have fair value, and if anything transactions are included through profit and loss. If anything plus or minus is there, when it is going to be paid off. Okay. Equity instruments, fair value, comprehensive instruments. You have debt instruments. Amortization. Is it right? See, when there is a fixed, see what is the concept of amortization? When there is a fixed life, when there is a fixed life, we have to calculate amortization. When it is an indefinite life, we have to calculate the impairment. Is it right? That is the difference between the concept. Now you understand that how much you are going to pay and what is the closing balance, and subsequently it will be reflected. Good. We'll go to the question as such now. Now, what they have mentioned, shareholding. A long-term investment is 10,000 in equity shares of another company. These shares are acquired on 1st of October 2002. Is it right? Dates are at the cost of 3.5. Transaction cost is 1% and the purchase price was incurred. The fair value of these shares is 4.5. Okay. Shareholding being a short term. This is it now. This they are talking about a long term investment. They are talking about a short term speculative investment. Is it right? Of 2,000 equity shares of the company. This acquired on 1st of December. 2.5. Transaction cost is 1%. And the fair value is 3%. Where possible, speculate, make an irrevocable election of fair value. Is it right? Means we have to take fair value on financial assets to be reported in other comprehensive income. Fine, good. The existing debit balance of the current tax is 2.4, represents over and under provision of the tax liability. A further provision is required by 30th of September at the end of the year. The existing credit balance of deferred tax is 2.5 and the required balance is 4.4. Okay, fine. Now, revenue, very interesting. Three things they have covered. Isn't it? Three different things. On October 1st, Speculate sold one of the products for how much? 10 million as part of sale agreement. Committed to ongoing service and product until 2005. The sale value of the service is included in the selling price of 10,000. The estimated cost of the servicing is 600,000 and the gross profit margin is 24. Ignore discounting. There is no present values. Okay? There is no present value. What they are asking? Which of the following meet the definitions of a financial asset? IFRS 9. What is the financial? An equity instrument of another entity is a investment. Is a investment. It is a financial asset. It is a financial asset. A contract to exchange financial instrument with another entity under conditions of potentially favorable. It is also a financial instrument. Is it an asset? A contract to exchange financial instrument with other entity under conditions which are a contract to exchange financial instruments with another company entity. No, we will never, that is the reason, we will never do on a unfavorable conditions. Is it right? We will never do on the unfavorable conditions. Always we do on the favorable. We will not sell at loss. Is it right? We will not sell on at a loss basis. We always sell on a profit basis. Is it right? We always do the thing. Means this is not the case. Why this is not the case? Because we cannot sell on a unfavorable conditions. The fourth one is definitely cash is an asset. Is it right? Answer is what? Answer is 1, 2 and 4. Is it okay?
Yes.
Next. Using the pull down approach, use the correct amount to be included in OCI with respect to financial assets of Alhamdulillah. Alhamdulillah. Fine. Sorry. Is it? Now. Under pull down approach, select the correct amount to be included in other comprehensive income in terms of financial assets. Now, where is that financial assets? Fine. Shareholding A and shareholding B. Is it right? Financial assets of okay. Fine. Which question it is there? It is question number 26. Is it question number 26? How much is there? Question number 26. Long-term investment. Is it a short-term investment, speculative motive? Okay. This is question number 26. See what other comprehensive. Other comprehensive means how much they have earned, how much they have sold, and how much they have gained. That's all. Okay. That is the only thing. It's simple. 10,000 into 10,000 into they have sold. What is the fair value? 10,000 into 4.5. Is it right? 10,000 into how much? 4.5. How much you got? 45,000. Okay. How much you got? 45,000. Next. Next. Is it right? A long-term investment on these companies were acquired in 2002 at a cost of how much? 3.5. Transaction cost of the purchase was incurred. 1% they have incurred. Is it right? 1% they have incurred. Means how much they have incurred? They have incurred 1%. Is it right? 1% means 1% means, where is the calculator? 3.5 into 0.01 plus 3.5 times how many shares? 10,000. Is it right? Minus 45,000. 9,000. Is it right? Yes. Is it? Put this as a A. Is it right? This is for question number 26 solution. Okay, 26 solution. Is it? This A. Okay. Next, what is the cost? Cost is going to be 10,000 into 3.5. How much? 35,000. Add. Is it right? Transaction cost. Is it? Transaction cost at the rate of 1%. Is it a transaction cost at the rate of 1%? You can write 35,000 into 0.01. Is it 35,000 into 0.01 into 0.01? It comes to how much? 350. Is it? It comes to how much? 350. 35,350. It is B. Okay, B. Now answer is A minus B. That answer is A minus B. 45,000 minus 35,350. It comes to how much? 45,000 minus 35,350. It comes to how much? It comes to 9,650. Here it comes to how much? 9,650. What is the answer? Answer is 9,000. 9,650. Again, I'm writing here. Cost is how much? Cost is fair value. Is it? Okay. You need it? Is it okay about this? Or I should write here again?
It's okay. No need.
Huh?
No need.
No need. Good. Is it right? Now, what is the total amount charged to profit and loss account for the year ended in respect of taxation? Okay, in respect of taxation, how much we have to charge? Okay, how much we have to charge? What is the taxation? Taxation, see the things. Here only I will write. Okay, taxation. Where is taxation? If there is a space, I will write here. Oh, fine. Okay, I will write here only. Is it right? I will put like this. Okay, taxation. Now, deferred taxation. How much is that? See, the existing debit balance of the tax account is how much? 2.4. Represents an under provision or over provision of the liability. Okay, a provision of 28 million is required for income tax. Fine. The existing credit balance of the deferred tax account is 2.4, and the provision required, this is the one, provision required is how much? Provision required is 2.5, is a 4.4. 4.4 is the provision they need. Okay, 4.4 provision they need. In that 4.4, how much they have provided? 2.5. Is right? 2.5 has already provided. Fine. Now, what we have to do? We have to defer tax. Is it right? Deferred taxation. Deferred taxation required. Is that deferred taxation required as on 30th September 2003. How much deferred taxation required? 4.4 million. Okay, 4.4 million. Fine, 4.4 million. Fine. Now, from this, they have already have the existing credit balance, existing provision. Is it right? Existing provision. Is it right? Existing provision is there. How much is the existing provision? 2.5. Okay, 2.5 million. Means it comes to how much? 1.9 million. Okay, 1.9. A provision for 28 million is required. Is it right? A provision of 28 million required for the year. Means you have to add 28 million. Is it right? You have to add. Now, before that, a existing debit balance. Is it right? On the current tax account. Is it right? Existing debit balance. See the things. Listen carefully. Assume it is a taxation account. Is it right? It is a taxation account. A taxation account will always be how much? It will be on the credit side. It is a liability. Is it right? It is a liability. How much is there? 4.4 they have. Is it right? How much they have provided? 2.5. Okay. This is debit. This is credit. Is it right? 2.5. Now, is it right? 2.5. This is what it says. Now, how much they have to existing debit balance on the current tax account is how much? 2.4. Represents under provision of the liability. Means there is under provision. Is it right? They represents the under or over provision of the tax liability. See, definitely if it is a debit balance, is it right? If there is a debit balance, it is under provision. Is it right? Is it? It is a under provision. If it is debit balance, if it is credit balance, it is a over provision. Is it right? Means what you have to add? You have to, if there is under provision, you have to add another how much? 2.4. Is it right? How much you have to add? 2.4. I will write it separately here. Okay, I just have this is under provision. Is it right? This is under provision. This is the requirement. Is it right? This is the required, and this is already done. Now additionally they have to make another. Is it how much they have to take additional? 28. Is it additional how much they have to take? 28. Is it this is addition new a provision of 28 million is required for the year. Now how much is there? Just make it a point. It comes to how much? 8. 4 plus 2, 10, 14, 1, 134.8. 34.8 minus 2.5. How much will get?
32.3.
32.3. Yes. How much is there? 32. I will write here only. Okay. I will write here only. Deferred taxation required 30th September. Is it right? 30th September 2003. How much? 4.4. Is it less? Already. Is it provided? Already provided how much? 2.4. 2.5 million. Is it right? 1.9 million. Is it right? Next. Under provision. Add. Under provision. Because it is a debit balance. Okay? Debit balance. How much under provision is? Under provision is how much? 2.4. Is it right? Under provision is 2.4. Add. Additional. Is it right? Additional taxation. Additional taxation. How much? 28. Okay? 28 million. It comes to how much? It comes to 3, 10, 11, 12, 1, 32.3. 32.3. Is it okay?
Yes.
Are you feeling comfortable if I'm teaching like this? Are you understanding how the question paper will be?
Yes.
Is it right? Next. What is the deferred income? This is with respect to revenue. Okay, this is with respect to revenue. What is the deferred income which speculate company could recognize in the statement of financial position relating to the contract for the supply of service and products? Is right, for the service and products, which is, this is question number what? Question number 28. Is that question number 28? Fine, that's good. Is that question number 28? Fine, question number 28. This is for question number 28. On October 1st, they have sold products of 10 million. Is it right? as a sale agreement. Speculate is committed to ongoing service of products until 30th this September. The sale value of the service has been included in the selling price 10 million. The estimated cost to speculate of the servicing is how much? 600 per annum. Is it 600 per annum? And speculate gross profit on this product is how much? 25%. Is right? Speculate gross profit is how much? 25%. They are fine. What is the question? What amount of the deferred income is recognized in the stay as of 30th September 2003? What amount of deferred income should recognize in its statement of financial income 30th September 2003 for the contract of supply of and service 2003? Is it 2003? This is 2002. Okay, this is 2002 as part of that agreement, 3 years. So that the sale value has been selling price. The estimate cost is this much. Profit margin is this much. 2002, October 1st, 2002. October 1st, October 1st, October 1st, 2002. October 1st, 2003. Is it right? October 1st means this is for 1 year. Is it right? Is it from October 1st, 2004 and October 1st, 2005. Is it right? 2002, 2003, 2004, 2005. Fine. This is going to be a deferred income. Is it right? This is going to be a deferred income. Fine. They are asking us to know the deferred income. Fine. They are asking us to know the income. Is it right? How much you have to recognize as a deferred income. Fine. How much to be recognized as a deferred income as such. Now, what is the profit they are charging? They are charging 25%. Is it right? 25%. On what they are charging? The gross margin profit is how much? Is 25%. Is it right? The gross margin is 25%. Fine. Is it right? Gross margin is 24 for 2 years. Is it right? We have to charge it for 2 years. Fine. Now, what is the amount of revenue? Deferred revenue will be how much? Deferred revenue income. Is it right? Deferred income will be how much? Deferred income is 600 into 2 years. 600. Is it 600 into 2 years? Is it right? 600 into 2 years. How much? It is the 1.2 million. Is it right? No, 1 minute. Estimated cost is how much? 600. Fine. 1 minute. We should not write this. Is it right? We should not write this. We should write we should write estimated cost. Is it right? Estimated cost. Is it right? Estimated cost. Now what they say, it is 25%. Is it right? 25% means 25% means is the profit. Is it 25% is the profit? Now 25% is the profit. Fine. Put like this. %25% is if 1.2 million, if 1.2 million just I'm putting, don't write answer. If 1.2 million is equal to how much? Is equal to 75. 100 is equal to question mark. It's not like that. It's not like that. If 75% cost is equal to 1.2 million, 100% of income is equal to question mark. 100 divided by 75 into 1.2. How much will get? Just calculate it. 100 divided by 75 into 1.2. Fine. Is that right?
1.6.
1.6. Is it right? See, okay. You have to write like this, is it? Because 25% is the cost, 75% is the cost, 25% is the profit. Is it right? Now we have to write like this. Is it right? If 75% of cost is equal to how much? Equal to, this is the cost. Is it right? For 2 years. Is that if the chemical cost is equal to 1.2 million, then 100% of the income is question mark. Okay, 100 divided by 75 into 1.2, it comes to 1.6 million. This is step 1, is it right? This is step 1, this is step 2. Is it okay?
Yes, it's okay.
Not that much understand, yes?
Yes.
See what you have to do. Is that, see, very simple. They have started when I am here. I can understand. Is that they have started when they have they have started when they have started on October 10th. Is it 2002? This is for 3 years. Is it right? This is what. Now they are asking, they are saying that 30th September 2003. This is the current income. Okay, this is the current income. This is the current. Now fine, we are not talking about the current income. They are saying that what will be the deferred income? Is it right? What will be the deferred income? Is it should be recognized in the financial position statement. What is the deferred income? The deferred income will be, see, for now 30th November, September 2004 and 30th September 2005. If you take these two into, that is why we have done, is it? This is going to be the deferred income. Okay, this is now how much you are getting. This is per year, is it right? This is per year. Per year how much? Per year is 600. 2 years how much you are getting? 1.2 million. Fine. Now they say that this is the cost, is it right? Plus profit. How much is the profit? Profit is 25%. Total comes to how much? Total comes to 100. Is it? Cost plus profit is 100. If 75% of the cost is equal to 1.2, then 100% of the income is question mark. 100, it comes to 1.6. Okay?
Okay.
Okay. Now I can sense is that some improvement is there. Is there anything is there? Just you let me know. Okay. If any by when you are doing revision, if you have any doubts, please let me know how we got it. Which two of the following are true in respect of the income which speculate has deferred till 2000? That what are the conditions has been true? Is it right? What they say, the deferred income will be split evenly between current and non-current liabilities in speculative financial position. This is what we are doing. We are splitting it into what? Current liabilities and non-current liabilities. This is one of the rule of the deferred income. Is it right? We have to split what is the next 12 months and what is after 12 months. Okay? Fine. The cost associated with the deferred income aspect should be recognized in the statement of profit and loss account at the time of revenue, at the time. This is very important. Deferred means when during the year it is concerned. Is it right? At the time it is. At the time as the revenue is received, their cost associated with the deferred income aspect should be recognized in the statement of profit and loss account at the same time as revenue is. What we are doing? We are doing with respect to what? We are using the matching concept. Is it? We are using the matching concept. When it has been recognized in the same year, it has to be reflected. Is it right? This is also true. The deferred income can only be recognized as revenue when there is a signed. No, there is nothing like signed written contract. Is it? There is nothing like signed written contract. There is nothing like, we cannot change, we cannot modify the changes. Is it? When recognizing the revenue associated with the service contract of speculative company, the stage of completion is irrelevant. No, it is relevant. Is it? It is what we have done. We have done it. See, first year we have done 1/10 to 2003 to 2002 to 30th September 2003. It is relevant. Is it right? It is very much relevant. Is that we cannot say no, it is irrelevant. When recognizing the revenue with the service contract, the stage of completion is not irrelevant. It is because see what we have done, deferred revenue. Is it? We have said it is a deferred income. Is it right? When we say deferred, we have divided. Is it right? We have taken 30th November, September 2004, 30th September 2005. Is that in this process what is there? Where we have given the importance, we have given the importance with the relevance. Is that maybe in accounting we have learned it is one of the qualitative factors is it should be relevance, it should be related. Is it right? Based on that we have to make it sure. Here also it is not going to work. What is the answer? Answer is A and B. Okay. This is section A and section B. Fine. That is section A and section B. This is section C. Can we do one question of 8 marks in section A, C?
Yes.
Okay. The following. Prepare the schedule of adjustments required in the retained earnings of Candy as a result of the information in notes 1 and 3. Okay, in the notes 1 and 1 to 3. Okay, 1, 2, 3. Okay, fine. We have to take all 3. Okay, we have to take all 3. They gave after preparing a draft statement of profit and loss account 31st September and adding the current draft profit before any adjustments required by notes 1, 3 below to the retained earnings. The summarized trial balance is there. Fine. It is okay. Wherever is needed, we will cover that. Okay. The loan was issued on 1st October. The issued cost is 1 million. Incurred issue cost of 1 million. Charge to profit and loss account. Interest is 1.8. 30 million into 6%. They have paid on 30th of September. It is redeemable after how many years? It is redeemable on 4, 5, 6, 7, 8, 9 after 5 years. Okay, it has been redeemable after 5 years. They have mentioned anywhere 5 years? No, they have not mentioned anywhere 5 years. Which is effective rate of interest of 9%. No other payment are due. Fine. Okay. Next, non-current assets. Definitely there will be some depreciation will be there in that. Is it right? Without depreciation, on 1st of October, Candy owned 2 investment properties. The first property is carrying amount is 15 million, sold for 17 million. Is it right? 2 million is the revaluation gain. Okay. The sale proceeds has been credited to suspense account. On 31st December, second property became owner occupied and so transferred to land and building. Fair value is how much? 6 million. This remaining useful life is considered to be 20 years. Okay. Ignore any deferred tax. No tax is there. Fine. The price of property has increased significantly in recent years, so director decided to revalue the land and building. The director accepts the report of the independent surveyor. On 1st October, the value of the land is how much? 8 million. and the buildings is how much? 39 million. This revaluation specifically exclude transfer property above. The remaining life of these buildings is how much? 15 years. Candy does not make any annual transfer of retained profits. The realization of revaluation will. However, the revaluation will be rise to deferred tax liability. The income tax rate is how much? 20%. Plant is depreciated at 12.5%. No depreciation charge on any non-current assets. Fine. Is it right? Plant is 12. A provision of 2.4 million is required for income tax. Okay, fine. 2.4 million we have to do. The balance on current tax is how much? Under provision. Over and under. Credit balance or debit balance we have to see. The current balance on the trade balance is the under or over provision in addition to the temporary differences related to information in Tour 2. Candy has further taxable difference of how much? 10 million as of 30th September 2005. Okay. First we will do the workings for this. Okay. First we will do the workings for this one. Okay. First we will do this. This is working note 1. I am doing here only. Okay. Working note 1. How much they have issued? How much they have issued? They have issued 30 million. Is it right? And what is the cost they have incurred? They have issue cost of how much? 1 million. Is it right? Issue cost is how much? 1 million. Is it right? No. Now loan notes issue value how much? 30 million minus issue cost how much? 1 million. It comes to how much? 29 million. It comes to how much? 29 million. Is it right? 29 million. Fine. 29 million. Okay. Good. Fine. Interest is how much? 1.8. Okay. Interest paid. Is it right? Interest paid is how much? 1.8. Where is that? Interest of was paid. Okay. Total interest accrued. Is it total interest accrued? How much is there? 29 million into 0.09. How much is the effective rate of interest is how much? Effective rate of interest is 9%. Is it right? Effective rate of interest is how much? 9%. How much you will get? 29 into 0.09. Is it right? It comes to how much? 2.61 million. Is it 2.61 million? Now, how much we have paid interest paid? How much you have paid interest? Interest paid is how much? 1.8 million. Is it? Interest paid is how much? 1.8 million. 2.61, 2.61, 1.8. It comes to how much? 0.81 million. No, we can do like this. Okay, 1 minute. Okay, 1 minute. See, don't 1 minute. Is it right? This is the particulars, particular opening balance, interest, interest paid, outstanding. Yes, we will do like this. Is it right? We will do like this. Is it? We'll do like this. We'll do particulars, particulars. We'll not do particulars also. 1 minute. Year, opening balance. Okay, opening balance, effective rate, effective interest, interest paid, closing balance. Okay, this we have done. Is it right? This is we have done. It is for the current 1 minute. For it is for how much? 30th September 2009. Okay, 30th September 2009. What is the opening balance? Opening balance. You see how much is the issue value is how much? Issue value is 30 million minus issue cost is how much? Issue cost is 1 million. Okay, issue cost is 1 million. How much is there? 29 million. Fine. Now take opening balance is how much? 29 million. Okay, 29 million. Effective interest rate is how much? 29 million into 0.09. Is it 29 million into 0.09? It comes to how much? We have just now calculated. It comes to how much? 2.61 million. Interest paid is how much? 1.8 million. Is it right? Interest paid is how much? 1.8 million. This is column 1, column 2, column 3, column 4. Is it? Column 5 is how much? 2 plus 3 minus 4. Is it? 2 plus 3 minus 4. How much will get? 29. 29 plus 2.61 minus 1.8. 29. It comes to how much?
29.81.
29.81.
81.
Is that 20? Now if we have done like this, nothing is there. This is what we have done earlier. Okay, if you put in a statement form, it will be, that's all. Okay, keep like that only. This is what? This is working note 1. This is working note 1. Okay, now Here only we will do the things. Okay, here only we do the working. This is related to working note 2. Okay, so that we can have the information here and we can write the information here. Okay. Is it right? Working note 2. Working note 2 says that they have what we have to do. Working note 2, what they are asking us, question, what is the question? Yes, what is the question? Non-current assets, is it right? Non-current assets. We have to work it out in the same. What is the first property had a carrying amount is how much? The first property is having a carrying amount of 15 million. Is it right? The 15 million and is sold for how much? It is sold for and was sold on December 17 million. Is it right? October 1st, 2004. Owned 2 investment properties. The first property is a fairing and was sold on 1st December 2004, 17 million. Is it? They have sold it for how much? 17 million as such. The disposals has been credited to the suspense account. The second property is how much? 6 million. And its fair value. Its remaining life is 20 years. Investment in fair value, how much? 20,000. Land and buildings, how much? 35,000. Is it right? Plant and machinery, how much? 58,500. They have done accumulated depreciation on buildings, is it right? Accumulated depreciation on buildings, how much? 20,000. Plant and equipment accumulated depreciation is how much? 34,500. Is that this we have to refer? Okay, this we have to refer. Now, how much is the land? We don't have depreciation, only on buildings, 35,000. And what is the amount of depreciation? 20,000. Is it right? What is the amount of depreciation? 20,000. Fine. Now, what they have said, a first property carrying was sold. The disposals is credited. Which property they have sold? 15 million. Is it right? Which property they have sold? 15 million. See the things. Is it right? See the things. How much is the buildings? Buildings are how much? Buildings are 35,000. Okay. How much is the accumulated depreciation? Accumulated depreciation is 20,000. Is it right? Accumulated depreciation is 20,000. The carrying amount is how much? The carrying amount is 15,000. Is it right? The carrying amount is 15,000. This is what it says. Is it right? Means it is related to what? It is related to buildings. The carrying amount is 15 million. 35,000 is the value of the buildings. Is it right? Land is 5 million and buildings at cost is how much? 35,000. Accumulated depreciation on the buildings is how much? 20,000. Is it 35 minus 20? 15,000. Fine. 15,000. Okay, means how much they have sold it. They are sold. This is the carrying amount. Is it right? Carrying amount. Carrying amount of buildings. Is it carrying amount of buildings? How much? 35,000 minus 20,000. It comes to how much? 15,000. Is it right? Next. 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 They have sold it for 17 million. We'll do that. Okay. The second property is transferred at fair value of 6 million, and the remaining useful life is how much? 20 years. What is the second? The second property became owner, occupied, and so transferred to land and buildings of how much? 6 million. Okay, fine. Is that? We'll find. We'll second property. We'll take into consideration. We are owner accepted and transferred to land and buildings at 6 million. Fine. Okay. Now, the price of the property increased in recent years, and so the director decided to revalue the land and buildings. When we are talking about what? We are talking in terms of land and buildings. Is it right? Land and what is the carrying amount? Carrying amount is 15,000. Fine. Carrying amount is 15,000. They want to, what they say that they want to revalue land and building. The director accepts the report of the independent surveyor. The value of land is 8 million and the buildings is how much? 39 million. Fine. The value of land is how much? 8 million. The fair value, is it right? Fair value, is it? Put it, okay, put it as like this, okay? Fair value, is it right? Fair value of land is how much? Fair value of land is 8 million, is it right? Fair value, this is 15 million, okay, or 15 million. The fair value of land is 8 million and the fair value of buildings is how much? The fair value of buildings is 39 million. Is it right? Total fair value is how much? Total fair value is 47 million. Is it right? Now revaluation gain. Is it revaluation gain is how much? Is it at carrying amount? Is it at carrying amount? Carrying amount is how much? 15 million. Is it right? Minus fair value. Fair value is more. Is it right? How much? 47. Is it? How much is that? It comes to how much? It comes to 32 million. This is revaluation gain. This is revaluation gain. Okay, now how much is the buildings? Buildings is 39. Is it right? Buildings is how much? 39. We have to see, we have to calculate depreciation on the buildings. Is it right? We have to calculate depreciation on the buildings, and we have to calculate depreciation on the buildings, and we have to calculate the depreciation on the they have transferred a property 6 million. Is it right? They have transferred a property of 6 million. On this 6 million we have to calculate depreciation. It is for how many years? It is for 20 years. Is it right? This is for 20 years, and this is for how many is the 39? This is remaining balance is how much? What is the remaining number of years of this second property? Where is that the building? So direct reval, the value accepted is this much, value of buildings is the reval specific excludes transferred investment property. The remaining value of the buildings is how much? Remaining value of the buildings is 15 years. Is that they have not included this? Means we have to include it. Is it? Revaluation has the revaluation specifically excludes the investment property, transferred investment property. Okay. Now, is it right? Means we have to take into consideration the depreciation, how much we are going to work it out. Fine. How much we are going to work it out. Depreciation. Is it right? Now, 1 minute. Is it? We will stop here. Okay. We have to go for prayers also. We'll complete this and we'll stop. Depreciation. Okay. Depreciation on buildings. Is it right? Depreciation on buildings. How much is there? 39 million divided by 15 years. How much we'll get? 39 million divided by 15 years. 39 divided by 15, it comes to how much? 2.6. Okay, 2.6 million. We will complete this and stop. Okay, otherwise, if we rush, we will not. Is that my depreciation on what? Depreciation on transferred property. Is that depreciation on transferred property? How much is the transferred property? 6 million. What is the life of the transferred property? Life of the transferred property is 20 years. Is it right? 6 divided by 20. 6 divided by 20. See the things. Is it right? See the things. What is the, they have taken it from how much? The remaining useful life on December 24th. Is it right? December 24th. When they have started on October 2004. Is it right? October 2004. Is it right? October 2004. On 31st December, the second property became owner or the occupied for the transfer of building 6 million. Its remaining life is how much? On December 2004. And we are making the financial statements when? We are making a financial statements on 30th September 2005. Means this is on 1 minute. This is on 31st December. Is it right? 2004. And we are preparing on what? 30th September. Is it right? 2005. How many months are they? This is 9 months. Is it right? How many months? This is 9 months. Is it right? Means. Is it right? Means. That means it is how much? It is 6 million divided by 20 years into 9 by 12. Is it right? 6 million divided by 20 years into 9 divided by 12. How much will get? 0.225. Is it 0.225? This is the total depreciation. This is the total. Now carrying amount is how much? Carrying amount is how much? You have fair value is how much? 47. Is that fair value is how much? Carrying amount buildings. Is it right? Carrying amount of buildings is how much? 47 million. Fine. Next, transferred property is how much? Transferred property is 6 million. Okay. Transferred property is 6 million. Total it comes to how much? Total it comes to 53 million. Is it right? 53 million minus minus depreciation. How much we have calculated depreciation? 2.825. 2.825. 53 minus 2.825.
50.175.
50.17.
175.
This is the carrying amount, which will show in the land and buildings. Okay, carrying amount of land and buildings. Okay, 1 minute. We will finish plant also. Okay, we will finish plant. Plant will not take that much. Is it right? Plant will not take. What is the carrying amount of the plant? Is it plant carrying amount is how much? Carrying amount is cost is how much for the plant? Cost is how much? You have the cost of plant 58,500. Is it right? 58. How much is the depreciation? 34,500. Is it right? Cost is 58,500 minus accumulated depreciation. Accumulated depreciation is how much? 34,500. 34,500. 0, 0, 0. 8 minus 4, 4. And 5 minus 3, 24. Is it right? 24. Fine. Now, it is okay. Now, what is that depreciation? Reducing balance method. Is it? They are talking about depreciation on the reducing balance method. Is it right? Reducing 24,000 into 0.125. Is it right? 24,000 into minus depreciation at the rate of 12.5% on return down value. Is it 24,000 into 0.125? It comes to how much? 3,000. Okay?
Okay.
We will stop here. Okay? We will stop here. Tomorrow, what we will do? Tomorrow, 1 minute. Tomorrow we will straightforwardly start cash flow ratio analysis, and we will keep this pending. And once we come back, once we come back, we will do adjustment for the taxation. Then we will go for the other things. Okay? Okay? I will send you this file to you now. Okay?
Okay.
I will send